Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Hello everybody, welcome to the Forex Daily Video Research. Today we will talk about the Great British Pound again. Well, Great British Pound really strong on the weekly and monthly time frame, and I have the bullish view on the cable. I think that market on the longer term can reach the nearest target first, 163.50 area roughly, and even as far as previous highs around 170.50 area. But the more interesting and not so obvious the price action on the lower time frames. Well, today's research will be a bit larger than usual because there are many nuances on the lower time frames, and I would like to discuss it with you in this research. So we will start from the monthly chart of the Great British Pound. Look at this. General market showed the real strength because look at this move to the upside. AB move was strong, and this was just a shallow retracement around 382 Fibonacci support from this low to this high. This very shallow retracement. Next target from this ABC bottom pattern, 618 expansion around 163.15 area. Also, the next we can see that this level of resistance, this 618 resistance from this high to this low, and market already has touched it once right here. This was also the monthly pivot resistance 1. Well, currently situation is almost the same level of resistance, and also the monthly pivot resistance 1. As you know, I've told about this million of times, when the market will touch this level of resistance second time, it will be weaker. It will become weaker when the market touch it again. Well, and very often market shows such kind of price action that when it first once retraced, second, and the retracement from between the second touch and the third attempts to break out usually shallower than between the first touch and the second touch. Market touch once, retrace touch second, shallow retracement and breakout. If of course we will not see the breakout right now. Well, I expect that market should retrace. If this retracement will come in place, it will retrace till monthly pivot point around 156.40. Well, I personally would not like to see a deeper retracement. Besides, as you can see, monthly pivot point tradable by the price usually in the 70% of cases. Well, this monthly pivot wasn't traded, this wasn't, and this wasn't. All others monthly pivot points has been traded by the price action. Okay, so and I think that sooner or later this level market will break to the upside. Now, but there are some nuances exists right now, and we can talk about it on the lower time frames. Let's shift it to the daily chart. You can see this parallel channel, upside parallel channel. The red line is the MACD predictor on the market. Look at this pattern, A, B, C bottom. Market has reached 100% expansion retraced. Now it reached 127 expansion around 159.84, precisely at the monthly pivot resistance 1 and Fibonacci resistance around 159.64. Market has shown wash and rinse of the previous highs right here, established new highs around 160.13 and retraced back. In general, this is the bearish sign for the market. When the market shows attempts of breakout and failed, usually this leads to some retracement to the downside. But look at this pattern. This is a MACD predictive failure pattern that we discussed very often during the latest times. Well, usually also it calls a stop grabber, and usually it leads to the previous highs. So this is shift trading failure, when the market tries to shift trend to the downside, to bearish, and fail, and returns back. Usually this price action leads to the previous highs, and market should clear out the previous highs. So very contradictive signals. Washing is from the one side and MACD predictive failure from the other side. If we'll talk about the daily time frames from the support point of view, so there are two important supports from the coming week. This one, 158.79 Fibonacci support area from this low to this high, and this weekly pivot point for the next week, 158.98, and my preferable area, 157.96, 158.15 daily confluence support and weekly pivot support 1. When usually market starts retracement after the rallies, it retraced to the weekly pivot support 1. This retracement also can be reached. This is another daily confluence support and monthly pivot point, but it will happen, I suppose, not on the coming week. I think that it can happen later or not happen at all. But on the coming week we should concentrate our attention on this level. Now I want to show you something really exciting and why this level is particularly interesting. Look at this chart. This is also the same daily chart, but this is enlarged fragment from this chart. Look at this first drive, retraced, second drive, retraced. We can expect and market can form the 3-drive sell pattern, and we have some conditions for this that already has happened. Look at this. The second drive precisely at 127 expansion from this high to this low from the third drive retracement. Third drive should be the combination of 127 from second drive and 1618 from the first drive. And for that purpose, market should reach precisely at this our daily confluence support area. For establish 127 extension from this high to this low, like on the picture. For confluence of this, for 127 from the second drive and 1618 from the first drive, should show the conjunction in one area. For this purpose, market should retrace precisely at this level of support, and this is one of the possible scenarios before market will move to the downside. Then we can expect, if 3-drive will accomplished, then we can expect some deep move to the monthly pivot point, this retracement. Usually during the third drive sell pattern, market should clear out the low between second and third drive. This is the normal target. This is this level. Okay. Now, how we should act in this very sophisticated possible price action on the coming week? I want to show you the 30-minute chart. This is our version rings that we talked on the previous video research. Now look at this picture. This picture shows very interesting scenario, and we can take participation in this. But this will be some kind of slice and dice game. Why? Because market shows really strength returns back on the Friday price action after the non-farm payrolls release. At the same time, look at this pattern. Market has accomplished 1618 butterfly target sell. Also it accomplished from this A, B, C pattern 1618 expansion. All these targets precisely at 618 resistance from this high to this low. Well, personally I have the short position around 159.40, and here is why. Although we have not sufficient context for the downside game, we can place very tight stop, because we should place stop in this scenario somewhere around 159.80 and 160 area precisely. There is no sense in placing stop just above the highs, because if this pattern will not work, because this was a rejection of price and we do not want to see deep retracement in this body of this sell-off. If it will happen, it means that this scenario is cancelled, and in fact market will show some breakout of to the upside. That's why we should place stop somewhere around this area. Personally I have the stop at 159.90 area right here. But if this scenario will work, we will have A, B, C, this larger ABC top with the target 100% expansion 157.63 precisely at our daily confluence target of support, before we will move to the next high if 3-drive sell pattern will start to materialize. Okay, this very interesting scenario. How I plan to act during the Monday? Well, look at this weekly pivot point. I suppose that market should touch it during the Monday because, as I said, weekly pivot points trades also above the 17 or 80% of times. When it will happen, I can move my stop to the break even. If weekly pivot holds, then possibly we should expect the upper breakout and taking out of these highs. It means that market will not intend to form the through drive self pattern, and it just will show the breakout of previous high. So in this case I just exit on the break even or somewhere on retracement after the pullback from weekly pivot point to the downside. Okay, but if weekly pivot point will not hold the market, I will receive this very solid move to the next confluence support, daily confluence support around 158. This might take profit right here. Also there will be some stops just below these lows, and when market will take it out, we can show some additional fuel to this down move, and market can penetrate this until this weekly pivot support 1 will be held by the market, will be touched. Okay, this is the scenario for the Monday price action. It's a bit tricky because this was really solid return back, but due to tight stop and very solid risk reward ratio, I am already in this game. Okay, you also can try to do this, but control your risk, and if it's not suitable for me, better to stay aside. If weekly pivot holds, then the possible market will show taking out of these highs. If not, we will receive the move to the 157.63, 158 roughly to this area. Well, we should take chips off the table, because then we can turn to the 3 drive self pattern and to see new move to the new highs. This is the price action that I expect to see on Monday. It's a bit sophisticated, but I recommend you to read my analysis on the forexpeacearmy.com, the text version of it, to take the detailed view with the text on this current situation, because it has very interesting possibilities for trading right now.